And with us right now, we've got John Iorillo. And John, you're a partner at Accelerated Consulting Group. You're found on the web at accelcg.com. That's ACCELCG.com. And so you provide services to small, medium, large-sized businesses, a lot of VCFO type services, consulting, insurance, healthcare consulting as well. And you've gone through a lot of growth over the past few years. So first off, congratulations and thank you and welcome to the show.
Thank you. Thank you for having us.
So give us a quick overview of what Accelerated does.
So we do kind of 4 different types of business activities at Accelerated. One is our executive consulting division, where we'll come in and act as the CFO or chief operating officer of smaller based companies, either on a project-based scenario, or we'll stay there and continue to engage with the client for the long term. I'm a CPA, one of our other partners is a CPA as well. Another portions of our business are software development, primarily in the workers' compensation space. We've had a couple clients for over 17 years, and we have a team of software developers that have managed those relationships for that long, and then we've added a couple other clients as well from that relationship. And then a bulk of our business is in the workers' compensation space, primarily in the PEO arrangement, which is a professional employer organization, where we work with clients and agents or brokers in the marketplace to help their clients secure workers' compensation in those industries that find it very difficult to secure coverage. For instance, temporary staffing entities have a large challenge, securing those type of coverages. So we help them with that. And that's primarily in the California marketplace, although we do have customers all throughout the country. And from that, our clients were asking for a life and health opportunity or solution that was not the traditional life and health type products that you're buying in the marketplace through, the Aetnas and Uniteds of the world, because they continue to increase in cost. The benefits continue to decrease. Yeah. It becomes an unaffordable, challenge for them. So we went out and secured, relationships with virtual primary care entities and a medical cost sharing entity as well to really provide alternative solutions to our clients. So we've been focused on that, and some of our clients encompass, 3 or 4 of our divisions, and some, we just do, one of our core focuses or core competencies with those clients.
So John, how does someone know if they are ready? If I'm a business owner, how do I know I'd be ready to, or what reasons might I want to look into a PEO? And can you kind of explain a little bit more how that works?
Yeah, a PEO allows an organization to really focus on what they do well, making their products, selling their products to their customer base, and alleviating them of the administrative burden of, processing payroll, filing the payroll tax returns on a daily, quarterly, monthly basis, whatever it may be, and then ensuring that they're compliant with all state laws and things of that nature that change dramatically all the time, because the governments get involved in a lot of those research. So what we do is we'll place our clients with a PEO relationship so they can focus really on their core business, and we can provide all those ancillary services to them, whether it's health insurance, workers' compensation, payroll administration, HR type compliance services. So that allows our clients to like I said, focus on what they do best, is making their products or providing their services to their core customer base.
Yeah. So, and so one thing, obviously, so let's say that someone's listening and they say, well, we're up to the point now where we've got, 3-4 W-2 employees. We haven't offered healthcare because it's just so expensive. Right. I wouldn't even know how to do that. We have a lot of freelancers, a lot of independent contractors. But what would be a good entry? Like if they're saying, listen, I'd like to be able to provide something for my employees here, but I don't know what that first step would be. Obviously you work with health sharing plans, which personally I've been using, when our healthcare costs, when we had to go into the open market, we had a grandfathered plan, which is really nice. We were paying about, I think, $450 a month for my family. Wow. And, we had a pretty high deductible. When you're self-employed, you just have to kind of play that game there.
Sure.
But we got kicked off, and we can no longer had to go into the open market. Our healthcare costs went from $650 to over $1,600 a month when we lost our grandfathered plan and had to go into the into Obamacare, into the exchanges and that sort of thing. So thankfully we had found a health sharing plan, and that reduced our cost from $1,600 a month down to $450, and at the time now $500 a month. And it's a little bit different. Health share plans, if you're not familiar, it's a little bit different.
Right.
And thankfully, things like pre-existing conditions, thankfully my family and I were all pretty healthy, so we were able to kind of get coverage for pretty much everything. But can you kind of just give a quick overview on how health sharing plans work and who that would be a good fit for?
Yes, no problem. So medical cost sharing is a great alternative to the traditional healthcare plans that you see out there, not only from a cost savings perspective, but from a freedom of choice perspective. So there are no networks in medical cost sharing. You're able to go see any doctor that you prefer. You can go to the Mayo Clinic, you can go to the Cleveland Clinic, or whatever it may be. But there are some limitations. It's not for all individuals. It does have some limitations as it relates to pre-existing conditions in the first 3 years that you're with the medical cost sharing program. And what's unique about medical cost sharing, you're really sharing in the medical expenses of the community. So you're contributing on a monthly basis, what they call a member share. And when you do have a medical need, as they call it, once you've met your initial unshareable amount, which is like a deductible, although we don't like to use the word deductible because it's not health insurance or traditional health insurance that's overseen by a Department of Insurance. It is medical cost sharing. Once you've met that obligation, the community, all the members within that health sharing program will share in your medical expenses until you're released from care from that one particular need. For example, if you were, on the weekend you were playing soccer with your child and you broke your ankle, from the time you went to the emergency room, had surgery, had any drugs that you had to take during the rehab and subsequent physical therapy would all be covered once you've met that initial unshareable amount. So it's a great program, and the great thing about it is they're really looking after the needs of the community. So that, the one medical cost sharing program that we utilize uses something called Second MD. So they'll go out and ensure that if you need surgery, they'll go out to the community, make sure that that surgery is the proper protocol for you based upon the injury or the sickness that you've had. And sometimes, a lot of these doctors are conducting unnecessary surgeries, putting you through a lot of pain and suffering when rehab might be the best solution for you. And then they also, do a lot of cost negotiations on your behalf. Because they're trying to work on behalf of the community, it's amazing what some of these costs or medical bills are reduced to through negotiations with the hospital groups or the physicians or what have you.
So as an employer, I could offer a health sharing plan to my employees. Now, granted, again, if they have pre-existing conditions, that's going to be kind of a bummer for them because that's not going to help with that, right?
Correct. Now, for instance, if you do have a pre-existing condition, say you had heart surgery, 2 or 3 years ago, but you're kind of on maintenance, and all you're doing is really going to have an annual checkup to make sure that everything is working the way it should be. It still might be a viable solution for you. It's just going to be limited in what it will cover in the first 3 years. But if you're stable or what have you, it may still be a good solution because the cost savings are dramatic, as you mentioned earlier, from $1,600 down to $500. You can pay for a lot of office visits with that $1,100 a month savings.
Yeah.
So we do have companies that do adopt it, even though they may have some pre-existing, knowing after 3 years that pre-existing limitation is gone. And in the second year, you do have $25,000 worth of coverage for any of that pre-existing conditions in year 2. And then it increases to $50,000 in year 3.
Wow. So as an employer, I could pay around $500 a month or so per employee to be able to offer this then as a benefit.
Well, if it's for an employee, it'd be less than that.
Oh, okay.
You were mentioning $500 is probably for your family coverage, I believe.
Oh, right. Exactly.
Yeah.
Exactly.
So your employee coverage, it depending on the age and what initial insurable amount that they select. I mean, for example, the premiums can be as low as $169 all the way up to $800, depending on how old you are. And that's, going from an 18-year-old all the way up to a 64-year-old. And then once you hit Medicare, medical cost sharing wouldn't apply. So
yeah, right. Very, very cool. And so in terms of, so aside from that, we talked about PEOs, we talked about being able to offer, a health share plan. Where else does Accelerated come in and help?
What we really do is we work with, whether it's an individual or a company owner, we really try to help them navigate based upon their needs and their budgets as well. So it depends on what you're looking for as a business owner or an individual, and ensuring it meets your budgetary needs. Because I'm a CPA by trade, I understand the financial impact of every decision a business owner has to make and where the opportunity for cost savings are. So we really work with them to provide something that they really want to. We can offer a United Healthcare plan or one of the quote unquote BUCAs, but we typically try to look at some of the alternatives because, with out-of-pocket expenses and deductibles increasing every year, some of our employees cannot utilize the healthcare plans that are being provided by their employers because they don't have that much money sitting in a bank account to address their needs. And it's a sad situation. It's not going to be fixed anytime soon.
I mean, as an employer, for me to, that would be really expensive for me to pay another $1,600 a month for my employees. So, I don't know where the money comes from, money that I would not pay them.
Right.
It doesn't come out of thin air.
Right. So I think there's a lot of opportunities to really work with our potential clients and our clients to provide a plan that really works within, their budgetary needs and, what they're trying to achieve as a business as well.
Yeah. How else have you gone into a company and helped them increase profitability?
Well, I mean, a lot of what we do, on the consulting side, we might go in and do system implementations to really streamline their business processes where you can either eliminate personnel or reallocate personnel to more productive means within the organization. So we'll do a lot of that on our consulting side. And then obviously on both our workers' compensation and our life and health side, we're really working with our clients to perform really well. And then we work with our other partners that we're placing in that business with to drive cost savings based upon good performance. For example, if we have a large temporary staffing company that has a great year from a claims perspective on their workers' compensation program, we'll work with our PEO partners to get decreases in subsequent years. So we're always working on behalf of our clients to drive savings throughout their their business model or what have you. So that's really what we focus on.
Terrific. And John, how have you guys been able to grow so quickly, or have you been able to grow such a good book of business? What do you do?
Yeah, I think a lot of it because we're very well known in the PEO space. With Tom and I used to own a PEO that we sold about 5 years ago, and we're still partners with them. We bring business to them, so a lot of it's reputation. And as any good business does, your clients refer you to new opportunities. We don't do a whole lot of advertising or anything like that. It's really word of mouth and reputation. And we try to do what's right for our clients and try to treat them with respect, and hopefully we get the same respect back from them. And I think it's worked very well for us. And we're a small company, but we've been fortunate enough to grow, and our partners are very involved in every deal. We don't have a bunch of client support people that we pawn these people off to. Me and our 3 other partners know almost every client individually as well. So if I'm on vacation or not available, one of the other partners just pick up the call and make sure that the client's taken care of in a timely fashion. We might not be the smartest, but we're the most responsive people out there. So that's what we pride ourselves in.
Great. John Iorillo, you're a partner at Accelerated Consulting Group. Again, you're found on the web at accelcg.com. That's ACCELCG.com. You and I are going to have a chat about health sharing and, kind of looking down at our future just to see if that might be an option for our team. So if they're listening, hooray for them and hooray for all of us. And so, John, thank you so much for joining us.
Thank you.